Good morning everyone, this is Sakis Paraskevov, fundamental analyst at IronFX Global, bringing you the morning comment for the 27th of October. Dollar weakens on disappointing housing data. US new home sales declined in September, suggesting a segment of the housing market could be cooling down. However, the moderation in new home sales is in contrast with other housing data, as existing home sales, housing starts, and building permits for the same month, which showed signs of a recovery. As a result, the September report does little to change our view that overall the housing market is improving. Despite the soft data, the weakness in dollar could be also attributed to some profit taking ahead of the FOMC meeting on Wednesday, especially following the recent rally of USD. Overnight, New Zealand's trade deficit widened unexpectedly in September as dairy exports declined, dragging down the country's exports, while imports remained strong across a range of categories. As a result, New Zealand recorded a trade deficit of about $1 billion for the second consecutive month in September. The recent rebound in global dairy prices won't be captured in the trade figures until November. New Zealand dollar USD fell sharply following the release, but recovered immediately to continue to drift around 0.6780. Investors have adopted a cautious stance against QE ahead of the Reserve Bank of New Zealand policy meeting, amid speculation that the bank will remain on hold at this meeting. Yet, an unexpected rate cut or a dovish tone from Governor Wheeler could put New Zealand dollar under renewed selling pressure. As for today, the highlight of the day will be the preliminary UK GDP for quarter 3. The forecast is for the growth to have slowed to 0.6% quarter-on-quarter from 0.7% previously. However, given the strong industrial production for August and the much better than expected retail sales for September, we see the likelihood for a positive surprise rather than a slowdown. In Eurozone, the M3 money supply is forecast to have accelerated to 5% year-on-year in September from 4.8% previously. The 3-month moving average is expected to accelerate a bit if the forecast is met. Private sector loan growth increased in August, and the latest ECB lending survey showed further pickup in loan demand. As a result, loans to the private sector are also forecast to have accelerated modestly. However, these data are not major market affecting, and therefore the reaction in the market could be limited. From the US, we get durable goods orders for September. The headline figure is expected to fall for a second consecutive month, while durable goods excluding transportation equipment are estimated to have remained unchanged after falling somewhat in August. The focus is usually on the core figure, where a positive surprise could suggest a possible turnaround in business investment and could support the dollar somewhat. The preliminary market service sector PMI for October is forecast to have remained unchanged at 55.1, while the Conference Board Consumer Confidence Index for the same month is forecast to have declined fractionally. The S&P Case Shiller House Price Index for August is also coming out. As for the speakers, we have no speakers on Tuesday's agenda. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, fundamental analyst at IronFX Global, wishing you solid trading.